Major Australian companies have been reporting massive profits and they're having a big impact on inflation. Airlines, supermarkets, banks, energy companies have all been raking it in at a time when most Australian workers are struggling to keep up with rising prices. And of course, that's led many of us to ask, is this fair? And what, if anything, can be done about it? The Reserve Bank, our main instrument for dealing with inflation, says prices can only go up by 2 to 3% a year in order to maintain decent living standards. And as we can see, prices are shooting up all around us. Some of the causes are global, like the war in Ukraine disrupting energy supplies because Russia is a major oil and gas producer, or China's previous tough lockdowns affecting the production and export of goods. And some are local, like last year's floods knocking out our food production. These costs are unavoidable and result in a bump in the prices we pay at the supermarket and fuel pump. But another massive contributor to the current inflation are corporate profits. According to a report by the Australia Institute, corporate profits made up 69% of all the inflation above the Reserve Bank's 2 to 3% target. In fact, the average annual inflation since the pandemic would just be 2.7% if it weren't for these profits, i.e. within the Reserve Bank's target, meaning they probably wouldn't be raising interest rates. So why are major industries recording huge profits? When Qantas announced its record profit, it was accused by Labor Senator Tony Sheldon of ripping off customers and profiteering. Between October 2019 and October 2022, airfares had gone up 27%. So airlines are charging a lot more than people were paying before the pandemic. One way they might be doing this is by restricting the amount of services on key routes to keep airfares high. Remember those $1,000 return flights between Sydney and Melbourne? The issue prompted the ACCC to warn airlines to start increasing capacity so that airfares would go down. What about supermarkets? It's true, the supply side issues like floods and fuel costs are contributing to the grocery bill. But are supermarkets nudging them up just a bit more than they need to? Investment bank UBS said Coles' recent profit announcement was better than expected and backed by strong supermarket sales and, wait for it, increased margins. We're also seeing the same issue with banks. Naturally, when the Reserve Bank hikes interest rates and you pay more on your mortgage, that money goes to banks. But what the banks aren't doing is raising interest rates on savings accounts at the same pace. So in reality, your mortgage repayments are just lining bank profits. Reserve Bank Governor Philip Lowe acknowledged as much in a recent Senate estimates hearing.
When we put up interest rates, the immediate effect, I think, is a boost to bank profits, particularly if they're slow in raising deposit rates, which they have been.
The ACCC again stepped in, this time to announce an investigation into how banks set interest rates for savers, including differences in interest rate increases between bank deposits and home loans. All up, Australian businesses have increased prices by $160 billion a year above taxes, labour and other costs. That's an extraordinary amount. So what can be done about corporate profits? Well, for one, it exposes a weakness in the instruments we have available to deal with inflation. When inflation is caused by demand, i.e. consumers spending too much and overheating the economy, the Reserve Bank's tool works as designed. It raises rates, forcing us to spend less, and the economy cools. But when inflation is caused by supply issues and profits, the Reserve Bank has little leverage. And even Philip Lowe agrees with that.
There's very little that monetary policy can do to offset supply shocks.
But the RBA governor did provide some thoughts on what government could do to help.
If we can increase competition, that puts downward pressure on prices.
What economics tells you is that you will get lower prices if you have more competitive markets. They're not my words. That's exactly what Labor Assistant Minister Andrew Leigh said in July 2022 when he vowed to prevent excess market concentration. Looking at those sectors I mentioned earlier, we can see some of this market concentration play out. The airline industry, dominated by Qantas with one main competitor, still recovering from the pandemic. The supermarket industry, Coles and Woolworths make up 64% of the market. Banking, the big four make up 72% of the industry. Is it a coincidence that the industries with little competition are also the industries recording mammoth profits? The government has tools in its shed to increase competition through tougher antitrust laws, by empowering the ACCC, as well as making it easier for international competitors to enter the market. It can also help limit prices charged in the domestic market, which it has tried to do in the energy sector with a price cap on gas and coal. Another option is increasing taxes on corporate profits, so the excess gains made during periods of high inflation go back into public services. This is something world-renowned economists have been calling on governments to do. But government policies aren't quick fixes to inflation. If pursued, they would have downward pressure on prices over time. That means we're in a bit of a pickle, because the only immediate tool we have to tackle inflation is the Reserve Bank. And raising interest rates doesn't bring down corporate profits or resolve supply issues. This obvious disconnect explains why many economists and politicians are urging the Reserve Bank to halt rate hikes and the government to explore other policies to bring prices down.
There's surely a better way of locking up some of the cash in the economy.
What this inflation crisis has shown is that there's systemic weakness on two fronts. One, the Reserve Bank's inability to deal with a unique inflationary challenge that's not caused by wages or demand. And two, the government's failure over the years to better regulate industries to prevent corporate profiteering. If you like this video, I also write a daily newsletter called the Afternoon Update. It's a quick 3-minute roundup of the news that matters. I've popped a link in the description for you to sign up, or you can just download the Guardian app and you'll get the notification every afternoon.